I can't change that booty.
You just said that on camera. I was live. It's all right. It's like, you see, we have fun around here. All right. So I want to introduce everybody. I'm going to wait for some people to come in, get a couple of seconds. I'm in, but we don't have much time because real estate moves on regardless whether we're here or not. So Sheena has some things to do. So do I. So we'll make sure that we get all the information in a timely fashion. Thank you guys for joining in on this Wise Wednesday. I'm going to introduce, as you see, I'm on Facebook Live and I'm on Instagram. So I'm going to introduce an awesome mortgage lender, a lender named Sheena Dixon. She works with VanDyk Mortgage. I was actually fortunate enough to go to a seminar of hers last week, which prompted me to have her on this month for home buyer preparedness, because she spoke about obtaining a home loan when you're self-employed. And not only is that important to me, but it's important to a lot of my friends and family, because as you know, now we're in the age of doing it for yourself and having multiple streams of income. So a lot of us are entrepreneurs or small business owners, or working for ourselves, as far as maybe working for Uber, Lyft, or anything like that. So she's going to get you guys together and let you guys know some information, along with answering the questions that were asked yesterday for Talk About Tuesday that have to do with self-employment and being prepared for getting a home loan while self-employed. Hey, Chris, thanks for joining in. All right, so I'm going to now relinquish the cameras to her. You guys are done with me. You may hear me in the background asking some questions, but more than anything, she has the list of what you guys asked yesterday, and she'll be able to answer all that for you. So please have a warm welcome for Sheena Dixon of VanDyk Mortgage. Please enjoy what she has to say and listen closely, because you all need this information. I'm going to set this around to you, and let's see. Nope. There.
All right, that's better. It's weird looking at myself on here.
Is it?
Yeah.
This should be better, actually. Yeah, because it'll stand up. All righty, there we are.
All right, well, thank you for having me on Wise Wednesdays. I definitely appreciate the opportunity to educate. I do kind of have a list of questions that I'm just going to kind of go through, and I guess at some point, if anyone's has a specific question, feel free to type it in, and I'll do my best to get that answer for you. Okay. Since we're focusing primarily on self-employed borrowers, we're going to talk about some best practices and some good rules of thumb that you can use when you're self-employed. So one of the first things on here is one of the first questions is, how do you qualify as self-employed? So typically we look at your 2 years federal tax returns. That's going to let us know actually how much income you pay taxes on. That's the typical, that's the agency, FHA, Fannie Mae, Freddie Mac. Those are those general rules. Now, if you're in a situation where you that you just lowered your income to the point that you had so many write-offs, right? And then on paper, your income is next to nothing, but you still have the income. There are some other programs that we can use, bank statements, 12 to 24 months. All programs, you have to be self-employed for a minimum of 2 years. Okay. What documentation is needed? Again, we're looking at 2 years tax returns, or the required amount of bank statements for any specialty programs. So when we're looking at bank statements, we're not looking at the balance either. We're looking at the actual deposits. So let's just suppose you have for instance, maybe you tow truck driver, and you get a lot of, card swipes, you get income that way. We're not looking at the ending balance of each month. We're looking at how much is going into your account each month, all right? Do I need to file quarterly taxes? So really a best practice, if we're going agency, is going to be yes. You want to pay your taxes quarterly, because when you're in that position, that might mean that you're actually you have reported very high income. So if you reported high income and you have the money to actually pay the taxes, it's going to be best to do it quarterly so that at the end of the year, it's either zero or very low, and that we don't have to include like a tax payment in your debt to income ratio. How long do I have to be consistently self-employed? Again, the general rule of thumb is going to be 2 years. 2 years is just that. And
Can
then
I ask a question about that 2 years? So here I see that they differentiated the question by saying consistently. So with that being consistently 2 years, you can't start one business, decide you're going to start another business and start another business, or how does that work?
It depends on the business and the nature of the business. What we're actually looking at is not the actual business, but you being self-employed.
And then those deposits coming in, that income, that rolling in income.
Right.
Okay.
And then 2 years, we would need 2 years tax returns.
Okay.
So let's just suppose you started in 2000, the end of 2000, or the beginning of 2019.
Okay.
So you basically had, or let's see, you filed 1918. So let's just suppose you started the end of 2018, right?
Gotcha.
And you've been in business that long, so since 2018. But you didn't make enough money to file it on your taxes. But for 19, you got up and running, you were rolling. You filed it on 2019. Again, for the agency stuff, FHA, Fannie Mae, Freddie Mac. Right, we need another year of tax return.
A year to prepare.
Yeah. What's the ideal income bracket? Well, that really depends on the debt that you have. The higher debt load that you have, the higher your income should be to actually qualify. The lower your debt to income ratio, which that's the next question, is just going to be a less risky loan. What should my DTI be? It's going to depend on the programs, but the general rule of thumb for agency is going to be 28 and 33. So the front end, which is your total monthly income over your mortgage payment, they want that to be just 28%, and 33 is going to be your mortgage payment in addition to your other monthly debts showing up on your credit. That's the general rule of thumb. That is not etched in stone because it can go higher, but it's all going to depend on your overall credit profile, the overall situation, how much you're putting down, are there any delinquencies. It's going to depend on everything. So the best thing is always just to come in and have a conversation so we can find out what your situation is and come up with the proper plan for you. Do I need collateral? The house is collateral, right? So you need the cash that you're going to put in, and then the house that you're buying will be the collateral. Now, in some instance, some private equity stuff, they can probably do something with, they probably have special programs, but that really is for like higher end and people that have a little less liquid cash, but they have maybe a ton of net worth with just stuff tied up that way. Should I have a co-signer? That depends on your income. So the only time that I would suggest you have a co-signer, one is really if it's an option, right? Because we don't want anyone just out there looking for co-signers. But if you have that option, the only time I would suggest that is if you don't qualify for what you want on your own. So let's just say that you sit in front of me and you're like, Sheena, for me and my family, I need a $300,000 house because I need this, that, and the other. Then we do your numbers, but you're only at 275. And that you looked, you searched, you try to make it work, it doesn't work. In that instance, we could suggest a co-signer. Now your co-signer, one, we're going to use their income, but we also use their credit. So what that means is you want to have a co-signer with the minimum credit requirements. Hopefully just a really good credit profile. So it's no, I can use the co-signer's credit, but not the income, or I can use their income and not the credit. A lot of people think that you can just add a co-signer for whatever benefit that you need. No, we look at everyone's payment history. We look at everyone's income. Is credit still going to be a big factor? Absolutely. Credit is always a big factor. But again, it's the overall credit profile, even with the agency stuff. So even with the agency, the specialty stuff, it's the overall credit profile. We look at everything. We look at what you've done in the last 12 months, 6 months. We look at how much you're paying down, you're putting down. We're looking at if there were some circumstances beyond your control that are well documented. I mean, we take into account everything. We don't just say, all right, your credit's not so good, go away. And we don't just say, oh, you have a 750 score, you get a loan. We literally look at everything. The difference between income and taxable income. So this is really applies more to the self-employed borrowers, and it's basically your income could be your gross receipts. That could be actually what you're putting in the bank. Your taxable income is the stuff that is what you put on that line that you're paying taxes on after all your write-offs, and that's the difference. So I see a lot of six-figure incomes. Like if they were to claim that and pay the taxes on, I see a lot of six-figure incomes. But when we get to that adjusted or that business income, it turns out to be about $20,000. Now, obviously, in our area, you're not qualifying for anything at $20,000 a year. So we're going to look at that $20,000 on your tax return. So we get all the schedules. So if you're a corporation, we get the business tax returns. For the others, we just get all the schedules that go with your personal tax returns. Deposits and withdrawals. What should and shouldn't I do when preparing to apply for a loan? This is a very good question, right?
That was my favorite question.
Yeah,
that's why I saved it for last.
This is so. As far as the biggest thing, so for deposits, we look at cash deposits or non-payroll deposits. We always question. So cash, we absolutely cannot use. I'll say that again. My face is straight.
Say it one more time.
We cannot use cash. Okay, we cannot use cash. Other non like the deposits from your job, anything other than those, we have to kind of question depending on the amount of them. And the reason is, if it is your income, we need to know about it, especially if you're trying to use some type of down payment assistance program. So deposits can be a part-time income that you didn't talk about, or it could be, you let someone borrow some money and they're paying you. It could be anything, but we look at deposits. The best rule of thumb, no cash. No cash.
So with that being said, what if, and I know it's very rare that this happens, especially in our day and age of electronic systems and electronic payment systems. What if you run a mainly cash business? What would you do as far as those deposits?
That's different.
Okay.
So that's when we look at everything. So if you have a cash business, that's considered receipts.
Okay.
So we do consider that. Okay. But if you have a 9 to 5,
okay,
right? Okay. And then you don't tell us that you need furniture on the side, and you're, then we're like, what are these?
Okay. All right.
And then sometimes if it's cash, we have to back those out. So it's frustrating because what happens is it's your money, but you can't use your money. So if we know about this ahead of time, we can kind of get ahead of it and let you know the best way to handle it.
So documentation would be a good thing when you're anytime you're working as far as a side business or a main business when you're self-employed, that the receipts for those cash deposits are very important, correct?
Well, depends on the nature of the business. So if you have a cash business, the documentation is going to be different.
Okay.
Right? Yeah. So it's going to be a little different. And so we can kind of get some workarounds for that.
Okay.
Withdrawals. We don't care about withdrawals from time to time or your day-to-day expenses. What we do look for is it might be something showing up on your bank statement that's coming out regularly, just not showing up on your credit report. So now we have to question if you have an additional debt that's not disclosed on your credit report.
Okay.
And again, it gets frustrating. So if that's something that's happening, just let us know ahead of time. Withdrawals are just fine. We just don't want your accounts to end in a negative balance. I don't care if it's negative $1. I don't want to submit that statement ever, because you could be the best example of a client, but that thing ends in $1 and a negative balance, even if it's $1, you have to write a letter of explanation, because now you look like, how we're going to let you borrow money when you don't know what's in your account.
Right.
Mm-hmm. And, it happens to the best of us, but just letting you know that these are the minor things that it seems like it's not a big deal, but they're actually very big deals.
Okay. I actually had another question as far as the documentation that you needed. So I know, first and foremost, being self-employed, let's get that kind of defined.
Okay.
Being self-employed and applying for a mortgage loan, you would need an LLC or some type of documentation, correct? Or can you be self-employed without an LLC? How does that work as far as mortgage loans?
So self-employed is basically, it could be someone who gets a 1099.
Okay.
It could be someone who has a sole proprietorship.
Okay.
It could be anyone who gets paid, but not by a W-2.
Okay. All righty. All right. You guys hear that?
Yeah.
Just so you know, you don't have to have an LLC, because I got that question too. Let's write it down. You don't have to have an LLC as long as you have 1099s. What were the other ones? Anything that you could document without a W-2 was considered self-employed.
Right. So self-employed, you do have to show you're self-employed.
Mm-hmm.
Like you can't necessarily, like if you drive for Uber,
Mm-hmm.
you are self-employed.
Yes. Mm-hmm.
Right. If you own this brokerage, you are self-employed.
Mm-hmm.
Two different types of business, two different types of tax returns. However, they're both self-employed. I'm pretty sure the Uber driver isn't an LLC or a corporation or anything like that, or any type of partnership. So as long as you get income from any source from something other than an employer, you can be considered self-employed.
Okay. So let's say that they do have an LLC or sole proprietorship or some type of corporation. Would they need their EIN number? Would they need the documentation part of the organization, or are they getting an individual?
On the type of business.
Okay.
Right. So when it comes to articles and stuff like that, we typically get that to show whether or not if there's another business owner and what percentage of the income you're getting.
Okay.
So we get the articles of incorporation or articles of organization to kind of show that.
Okay. All right. Thank you.
You're welcome. Well, I enjoyed this.
Do you have any more little tidbits to give about self-employed individuals applying for loans and getting prepared for that?
Well, I'll say this. If you are self-employed, we definitely have to consider you being self-employed for 2 years. And that is actually reporting it on your taxes for 2 years. In the event that isn't the case, but you still have been self-employed for 2 years, we do have some alternative options for you. But we can't use anything that's not going into an actual bank account. So if you sitting on some money, if you get some type of receipts and it's nothing that you put into the bank, we can't help you because we can't see it. And you are not going to be able to just put a lump sum into your account and say, all right, well, this is my income. I've just had it for, this amount of time. Again, no cash. Now, if you submit a bunch of checks, that could be better because now we can see the image of the checks and it's tricky when it's cash.
Okay.
But we know things like Uber and almost everything else, they're going to deposit it to you some type of way that we'll be able to track.
So as far as I do have one more question. As far as electronic payment systems, I know that I've heard that companies or some people are having problems with like Cash App. Would that be considered an okay way of showing your income if you get paid through Cash App or
Depends
Venmo?
on the business.
Okay.
Depends on your business.
Okay.
So again, it's the overall picture, the type of business. If obviously you can't say that you're a real estate agent and and come in with Venmo or Cash App, right?
And you know what? I'm asking that, and I asked that kind of for myself as well, because as of right now, with my showing agent business, that's how I collect my payments, is through Cash App and Venmo.
But see, that's a showing agent. That's different. So once we know the entire picture,
okay,
so
but I can't.
All the details.
But I can't have my commission checks coming through Cash App.
Right. But now that we know the entire story, that could be considered.
Okay, understandable. Okay, all right, that makes sense. You guys hear that? Right. So it's gonna be pretty much case by case basis as far as what your business is set up to be, how the income is supposed to look,
right?
And that question can be answered further by people scheduling appointments with you. Correct, Sheena?
Absolutely.
All right.
And I like to give another example. An investor.
Mm-hmm.
If you're an investor, you have rental properties. Maybe your tenant pays Cash App.
Okay.
Right.
Or straight cash.
Right.
We don't do cash. No, we don't do cash. Okay, so just straight Cash App. Okay. Yeah. All right.
We don't do cash. All right. Because when we do cash, the amounts have to be exactly.
Okay.
It can't be like, all right, my tenant gave me $1,000 and plus I got this other $200 I'm gonna put in, and then you're gonna try to tell me that that's from the $1,000 a month. It just doesn't work.
Understand.
Now, when it is, if that is the case, everything has to match precisely. I'm talking the amount, the time of month,
the date,
the lease.
Everything. Mm-hmm.
Yes.
Okay. All right.
Everything has to match.
So documentation is key
over a period of time, over an extended period of time.
Okay. All right. Gotcha. All right.
It's been real. Been real, people.
Thank you so much, Sheena. I appreciate you. Once again, hey guys, I'm back. So once again, I am going to say, hey guys, hi everybody that tuned in that I didn't get a chance to say hey to. I'm saying hi to now because it was on Sheena. I'm gonna let her go and get out of her office really quick. But I just wanted to thank everybody for tuning in. If you guys have any other questions, please by all means reach out to me. The easiest way to get your questions answered is to schedule an appointment for a consult. You can call Sheena, you can call me. I will put Sheena's information up, and I'll put my information up in the comments so that you guys can reach out to both of us. So you'll have this information and you'll be able to ask these questions. Let's say you did not want to ask a question today, or you didn't think of it, or maybe you think of something later. You'll have our information to reach out and question us and use us as a resource and an asset in your life. So I wish everyone an awesome and productive Wednesday. Be loved, safe, and beautiful. And I will talk to you guys later. Once again, reach out for your consults and your appointments, and we can help you along in your journey to generational wealth. Love you guys. Have a great day. Bye.
All right, I got one thing.
And now, can I save it? Good, save it.
Can you tag me in it?
I got you.
Thank you. I think I was a little bit more comfortable this time.
You were. You did real. Oh wait, we're still recording over here. My bad.